So, hello everyone, welcome to another video. Just like you've seen on the thumbnail, we're able to get in another trade on CAD JPY. CAD JPY is doing wonders for us this month. You know what I'm saying? CAD JPY is doing wonders for us, and I believe if you're able to anticipate, or capitalize rather on CAD JPY, you should be able to make at least 7% on CAD JPY already. If you're following the entry strategy, you should be able to have made in two trades 7% on CAD JPY because we've had, perfect and astounding opportunities in the market for the past 2 weeks. So what do we do? As per usual, top-down analysis. There's nothing more, there's nothing less, there's nothing to it. Top-down analysis. Once again, on the monthly time frame, we're bearish. Why? How are we bearish? Market structure has shifted higher, high, high, low, high, high. Shift of market structure. We've closed the body close, not the wick. You need to understand that the body close is most important. You see what I'm saying to you? The body close is more important than the wick. So the body closed, this body closed right below here, so we're bearish. And I've explained before the falling knife, where the market is going to go retest the left shoulder before it starts to go down. Now, chart patterns on the higher time frame are very, 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 very important. They are very, very important. The market respects these chart patterns. The market respects these chart patterns on the higher time frame. Now, we do not trade on the weekly. We do not trade on the monthly, rather. Either. I mean, we do not trade on the monthly or on the weekly either. We trade on the 4 hour and the 1 hour. Because obviously we cannot. It's going to take a whole month for a candle to form. So we do not. You see what I'm saying to you? So we go to the weekly time frame, to see what's the market doing on the weekly time frame. Are we still bearish? Is the market, in a midterm reversal? You can find that through market structure. You can find out through easy market structure. Now you can see we're also bearish. These levels are very important. These levels I would employ you to try understand how to plot these levels. I've made a video before and I'm going to make another to give you a clearer view on how to anticipate these levels. These levels are very important. They are very important. In trading you need to be able to find confluence. You see what I'm saying to you? One is not enough. Two and above. I take it again. One is not enough. Two and above. In trading, you need confluence. Now, if your entry strategy is a trend line, that's just a trend line. It's not strong enough. But a trend line added with a break of structure, now that's something. You see what I'm saying to you? Now that is what something. You need confluence. You need what? Confluence. Now see, this place is solidified to me that that the market will respect it. Why? Rather this price, this price, right? 108.000. Because why? We're above chart patterns, and we are in confluence with run psychological. You see what I'm saying to you? Well, we're in confluence with run psychological, and you can see right here the market is so precise. The market, when they untapped the 108.000 and then rallied all and then shorted all the way to the downside. And so I'm saying to you, the market, let me zoom in for you to see. The market is so precise that it went there, tapped the run psychological and then fell. Now, I was able to capitalize on this, on this break and retest on the 4 hour time frame right here. I was able to capitalize on the 4 hour time frame right here. This was where we started making money on. This was where we got interested in CAD JPY. This was where we got interested in CAD JPY. We made money off of this. A little, 4-1. And then the market. What did the market do? The market, manipulated here. Listen. I need you to understand this. The market does not manipulate traders like us. The market does not manipulate us. You see what I'm saying to you? The market might have, manipulated, scalpers, day traders, but now, because we have a bird's eye view of the market, we are able to, sit back, wait for the market to take out, the little kids, wait for the market to take out the scalpers, the day traders, and then go and fulfill these institutional levels. You need to understand that, the entity of the market does not know if you have a support and resistance. It does not even care if you do. You see what I'm saying to you? But the market knows that it has to fulfill prices. That's what the market knows. The market knows that it has to fulfill prices. That's all it knows. It does not know if you have a support and resistance at 108.00. It doesn't know that. But what the market knows, what the entity of the market knows, it is that it has to fulfill prices. That is why we use price around psychological. That's why we've adapted prices into our support and resistance. It gives us a double confirmation. It gives us confluence to understand that, okay, this is not just any support and resistance. This is not just any supply or demand, or however you want to call it, but it is a price. You see what I'm saying to you? It is a pinpoint price in the market that we're expecting. Professional traders, they don't say, oh, I have a support and resistance here. No, we say at this price the market is going to turn around. At this price the market is going to turn around. So you can see at 108,000, the 4 hour retested, which was also a confluence with the daily time frame. We had a nice retest, a nice, a nice bearish engulfing, but we do not sell at the bounce of it, not even at the bounce. You see what I'm saying? We do not even sell. Now listen, when the market gets to a particular price of interest, we do not sell because it's there. We do not immediately, activate to sell or buy, a play, execute a trade because it's there already. No, we wait for a bounce, not just any bounce, but also a break of trend line and a break of structure. I take that again. We wait for a bounce, but not just any bounce, but a break of trend line and a break of what structure. Now I tell you a little secret, yeah. Whatever time frame, you're using to enter, on here we use the 1 hour and the 4 hour. Now, whatever time frame you decide to use to enter a trade, it must be in confluence with the overall view of the market. So, for instance, CAT JPY is bearish on the weekly, monthly, and daily. Our bias is to look for sales, right? Now, what do you think I'm going to go do? You think I'm just going to go execute a trade on the 1 hour because we've got into this area? No, I'm going to wait for the market. I'm going to wait for the 1 hour that I've chosen to use to get in a trade. I'm going to wait for it to what shift structure. It is very important. You have to wait for these things. Trust me. Listen. Following your trading plan is going to save you more. Listen, you might follow your trading plan and you might miss a trade. But trust me, if you do not, the one time you decide not to follow your trading plan, you're going to lose. I prefer, not taking a trade is also profit. You not taking a trade is also you being in profit. Trust me, you do not want to take losses. Not just losses, but unnecessary losses. Losses are normal, but you do not want to take unnecessary losses that you're going to have to look for a trade to get back into the green. All of that is long. All of that is a lot of work. What you have to do is be patient. Be patient. Trust me. Trust me. Be patient. It helps you to be patient. I've said before, in forex, the early bird, they do not catch the worm on here. They do not catch the worm. Is the bird that comes later. Is the bird that's patient. Those are the ones that catch the worm. You see what I'm saying to you? So you want to wait. You want to watch and just watch and see how the market is going to manipulate your stop losses. How the market is going to trigger your stop losses if you decide to just wait. Just what wait. So we got in an entry here for the first trade. We've made a video on this. The first trade, it was so beautiful. It was textbook, easy. The same strategy we followed here: break of trend line, break of structure. It's the same strategy we followed here again. Nothing different. Everything is the same. It's the same strategy we followed here: break of what trend line and break of what structure. You can see on the thumbnail. This is what we had on the thumbnail, and this is the exact same thing. We followed. I'm not going to come on here and say, oh, I'm expecting the market to do this. I'm expecting the market to, give me a certain type of entry and then do the contrary and then get in the trade, profit or I lose, and then come on here and say, no, whatever I've said here is what I'm going to implement in my trading. You see what I'm saying to you? So, making these videos is not just for me to, impute awareness into the forest industry, but it also helps me, keep to my word. Because if I come here and say, oh, I'm doing this, I'm doing that, and I don't do it that, and I don't do that the same way, the exact same way I've said it, it's a disservice to me. You have to understand that not every trade is a good trade. Listen, the fact that you win a trade does not mean it's a good trade. The most important thing in trading is that you follow your plan. It is your trading plan that makes you a profitable trader, not your wins and your losses. It is your trading plan. Your trading plan, that is what makes you a profitable trader. If you are able to follow your trading plan and profit, that's a great trade. But if you violate your trading plan, even the slightest, even the minimum, If you violate your trading plan and then you profit, you think that that's a good trade? No. In my book, when I journal, when I write down my observations for the week, that's a bad trade. Because why? Even though I've profited, it's a bad trade because I did not follow my trading plan. So learn to follow your trading plan. It's gonna help you. It's gonna keep you disciplined. You see what I'm saying to you? So we waited for a break of structure. Sorry, a break of structure right here, because obviously higher high, higher low. Because the market was bearish, then it became bullish right around here. Higher high, higher low. Higher high. I hope you can see this. It's quite minute, but it should be. Let me zoom in for you. So higher high, higher low. Obviously, so, textbook market structure. Higher high right above this high right here. Like I said, body close, not the wicks. Body close. Higher high, higher low, higher high. We broke structure right here. You can see we body close below. See, listen, I need you to understand this right here. The forex market is not just it doesn't move by mistake. The forex market is precise. The charts are precise. When a structure is broken in the slightest manner, trust me, it has broken structure. The market is not going to break structure and tell you, oh, it's done. No. When the chart breaks structure, when it tells you, oh, I'm about to head to this direction, trust me, it's about to head to that direction. You see what I'm saying to you? Just follow the plan. Break of structure is a little bit lower than this one, but I seen it with broken structure. Trust me, we're going to sell. So now we have two confluences, right? We've broken structure and then we've broken the trend line. Now you might be wondering, what if we break trend line and we don't break the structure? For example, something like this. For example, yeah, we might have not broken the trend line here. We might have bounced back up, but we've broken the structure, right? I'm still not going to get in the trade because trust me, I need these things to be in confluences and to be in confluence rather. I need these things to come together. That is what makes a great trade. You see what I'm saying to you? Even when I follow my trading plan and I hit stop loss, for example, I don't think I follow my trading plan to the letter and hit stop loss yet. I don't even know what stop losses are. But anyway, that's me being cocky, but don't mind me. But yeah, even when I follow my trading plan and I hit a stop loss, for example, it's fine. I'm not bothered because I have proper risk management. I'm not bothered because what I have proper risk management. So just for example, this market was the trend line. This was the trend line. This was the actual length of the trend line rather. And then we broke structure, but we haven't broken the trend line. Do you think I'm going to get in and say, oh, we broke? No, I need 2/2. Now we have 1/2. You see what I'm saying to you? I'll wait for the trend line to be broken here. When the candle closes outside, I execute. It doesn't matter what time. I do not trade sessions here. Over here, we are swing traders, we are position traders, so immediately we get our signal, we're in. You see what I'm saying to you? I'm not going to say, oh, the New York session. What sessions? We do not know what those are. Anyway, so yeah, this was the original trend line. The market broke. Now what did I do? I brought out my measuring tool. Entry was right there. I executed immediately. Now I don't just place my stop loss randomly. I look for specific numbers that I know that okay, the market might not the market might not get to. Now this is a secret. This is a secret. Yeah, the market rather the prices rather the market sorry, excuse me, the market fulfills prices of 50s. You see what I'm saying to you? 50s, hundreds, 200s, run psychological. Don't just come into the market and expect, oh, my support and resistance line, my order block. No, the market does not care about your order block. The market does not care about your support and resistance. It doesn't care. That's why it gets violated, because it doesn't care. It cares about its prices. So I have a I have a way of setting my stop loss. I look at the high. I see, if you look to the right, around here, if you look to the right in the price right here, you see that the wick is at what? Is at 52. You can see right there is at what? If 52 is oscillating, right? Is at 52, right? 108.052. Like I just told you, the market respects. There are certain numbers that the market respects. 50 is one of them. You should be able to understand. You should be able to know this. It's going to take time, but these are little pointers. 50 is one of them. The market respects 50. So what do? I make sure my stop loss is above 50. So 108.104. Perfect. You see what I'm saying to you? I just make sure my not 50 pips. Prices. I'm talking about prices. These are little pointers. That's what these are edges. You see what I'm saying to you? Everybody that's trading CAD JPY, they have support and resistance here. Majority of the people rather, they have support and resistance. Majority of us, we have this support and resistance. But what's the edge? What's the advantage you have over others when the market is in a little bit of a drawdown? Where is your stop loss at? You see what I'm saying to you? These are the little things that will give you an edge in the market. These are the little things that give you an advantage over other traders. You see what I'm saying to you? So you have to think, how are these market movers, how are these market makers, how are they doing it? Why are they, don't you just wonder sometimes why would the market go weak you out and just go and then go into your preferred directions? It has happened to me. Haven't you wondered why would the market just go and weak you out and then go into preferred direction? You see what I'm saying to you? Because it's going to fulfill prices. But anyway, so I drew it down. This was my first take profit. Now my take profit is the exact same place where we're coming from, obviously, and it was like a 3-to-1. I got my 4-to-1 rather. You see what I'm saying to you? So I got my money and I got out. Now I haven't closed majority. I closed partials. I took out 90%. Stop loss to break even. Now, like I said before, we're not day traders. We don't day trade over here. We are position traders. We look at the market in the long term. We look at the market in the long term. So my overall TP is here. This is the price 103.500. This is the weekly price. This is the weekly area which I use the weekly to get these thick lines. Now you might wondering why are they different shades. These thick ones are from the weekly time frame, and I get them off of chart patterns. As you can see, double top right here, double top right here, double bottom right here, double bottom right here. It's precise, it's beautiful, it's perfect. It's what I'm saying to you. You do not need no indicator. You do not need RSI to tell you. No, you just need market structure. You just need to understand market structure, chart patterns. That's all. That's all you need. It's to keep it simple. No RSI, no stochastics here, no Bollinger Band. Keep it simple. Keep it what simple. You see, just 4 lines, and I'm able to make money off of it consistently. 4 lines, I'm able to make money off of it consistently. Keep it simple. Keep it easy. Keep it sweet. So moving forward, so this is the overall TP. So imagine I'm holding my trade from here. Uh, my partials, I'm holding my partials, say 0.7, 0.10. I'm holding 0.10 lots, and I'm holding all the way here. That's more money for me. The same thing to you. I'm not in a rush. I'm not in a rush to get in and get out. I'm here to milk the market for the most I can. I'm here to get every bit of the pips I can. The same thing to you. So the market came for a daily retest, precisely bearish engulfing, moving down. Now, my next area of interest is right here, and I urge you lot to mark these areas on your charts too, so you can be able to capitalize like I'm going to capitalize on this, on this next trade. Break and retest here. If the market decides to come in here, fine, no problem. I'm selling again. More money for me, right? More money for me. I'm selling again, so long as the market maintains structure. Now you need to understand something. This is a lower low, this is a lower high, this is a lower low right here, this is a lower high. If the market decides to go back up into this level and body close above this high right here, it is still bearish because we haven't created a lower high to make this place the lower low. So so if the market has to violate this trend, it has to come and close above this high. Easy market structure. Easy. It's that simple. So even if the market decides to come up here, it's going to be a double top, no problem. I execute, I sell, more money for me, right? Easy. I just have to wait for the what? Break of trend line, break of structure. The same plan every time. I follow the same plan every time. Now the next opportunity for me is going to be a break and a retest over here, then sell all the way down here. So I still have a trade open here, and I'm hoping that CAD JPY, give us a break and retest here, or it pulls back into this place. Whatever, see, anywhere the money goes, we go to go anywhere the money goes. For my Nigerians, we go to go anywhere the money goes. If the market want to go left, we go left. If the market want to go here, we go here. Anywhere the money to go, now we go to go. You know what I'm saying to you? But yeah, jokes aside, so I urge us to make our trading simple, make our trading easy, make our trading easy. Be confident in your strategy, be confident in your entry. You see what I'm saying to you? So thank you lot for paying attention. Thank you lot for subscribing. Thank you for commenting. Thank you for liking. See you all next week.